Thank you for tuning in to another edition of Pre-Market PulseScan. Today is Thursday, December the 15th, 2016. Massive surprise as far as price action goes during yesterday's FOMC decision to raise interest rates a quarter of a point. Looks like I was wrong yet again. I tell you, if being a prophet was a business or something, I would have been fired and out of business a long time ago. It appears I know nothing. They raised interest rates a quarter of a point, 25 basis points. Nothing that was surprising. It was something that was already factored into the price action per se. But the weird thing is that people have been wrong before when the market suggested that something was going to be 100% possibility, and then it doesn't happen and it does the opposite. So it is a bit of a surprise, not too much of a surprise, but a bit of a surprise. The biggest thing, though, just like I informed everyone yesterday, is that it doesn't matter about if you're right about an outcome, a political outcome, or some type of economic policy outcome. All of that's irrelevant. The fact is the market's response to that decision. And that can be difficult to ascertain at times, how the market is going to respond. Because we've seen markets rally on bad news and crash on good news. It just depends on the situation. The most important aspect of it is, can you profit from it regardless? Do you have a system in place, a game plan in place, so that even if you are wrong, you can make money and put yourself on the right side of the trade? It is a foolish thing to not do your homework, not have a system in place, and just go by what you hear people say. If you just make your financial decisions just based on listening to people like myself talk, then you're operating foolishly. The way to make financial decisions is not just to listen to what people have to say, but being able to come up with a plan to prosper regardless of what happens. See, that's different. That's the difference between being an analyst and being a trader. And we analyze and trade what we see, not what we think. So I have been wrong on many occasions on economic policy, but I get paid for being wrong as a trader. Can you say the same? Can you say that you make money in the markets when you're wrong? That is the difference that separates foolishness from wisdom. Don't just listen to me in my videos and try to make financial decisions because I said the market was going up or down, or the Fed policy is going to do this or won't do that. They can always surprise you. And then what? So what do? You go in and you buy a bunch of shares because I said I think such and such is going up, or you sell out of positions, or you don't make a trade that you would have made if you didn't listen to me. Come on, that's ridiculous. That's not trading. What you should do is learn not to invest and trade based on your emotions, but learn to trade and invest based on facts and based on price action. That's what we do here. We follow the price action and trade with the trends. We love gold and silver here. The majority of my followers and clients and subscribers are gold and silver bugs and have been stackers all their lives. But we know better. We know that in order to keep this thing afloat, the Fed has to randomly and consistently attack the paper, gold, and silver markets. They have to come in and dump millions of ounces onto the market, paperly speaking, to drive the prices down further and further, because they're the ones that are accumulating the physicals at a far more rapid pace than you or I can possibly do. So what do? We play the defensive side because we're not liquidating our physicals. We go in and we trade along with the market. So while we have positions in the market for playing the bounce and the recovery, A, it is not full position. B, we're following the trend of the market. If you're not long the paper, I don't know how many times I can say this on a video. If you're not long the paper, then you are not participating in what you're seeing in the market. As I'm speaking, gold is down almost $32 in the pre-market, in the overnight market, I should say. That's whopping. That is shocking. To wake up and see that gold is down over $30 in the overnight market is devastating. However, if you are long the paper gold market, you are ecstatic. What do I mean by long paper? As far as the physicals go, we buy physicals. We buy gold bars and bullion, right? Long the paper means that we are long the inverse ETFs. That's what that means. So as they smash down the price, and here we are down almost 32 bucks, JDST, Dust, those shares are gapping up in pre-market. So we are participating in the smashing of the paper market for the metals while still holding our physicals. Yes, from time to time, you have noticed that we would get long JNUG and get long Nugget and get stopped out. That comes with the territory. That's trading. Losses are inevitable. It's how you handle losses. It's how you position yourself to fight another day. It separates you from everyone else. If you want to be a winner in what we do in trading, it takes discipline and consistency in your trade execution. You can't sit on the sidelines and not place orders. You can't get filled in the market unless you place orders in the market. You place your orders and you let those orders sit until they are triggered. That's how that works. If you're not doing that, then you're playing yourself and you're really not a trader. You're just a person that's playing around, speculating, gambling. That's not how you approach the markets. Taking a look at what we can expect in today's trading, we have a handful of rally alerts. We're still showing rally alert for gold. Yes, we're showing a rally alert for gold. Based on where the price trigger is and where the market is, we know that any type of a bounce here would be appreciated. But guess what? It's not going to trigger a long position today. But we're watching it because I still believe that gold is trying to find a bottom. If I am wrong and they continue to smash it down another $100, then so be it. We'll be long the paper. But we're watching it. We're watching it closely. As you look at your sheet, you'll notice that the downtrend is in full effect. It's locked in with negative momentum. Therefore, you'll be watching to see how the market behaves. The negative momentum indicators has turned down some more in gold in the pre-market. So the price inflection point for negative momentum has already been triggered to the short side. So this is definitely one to continue to watch. Silver, AGQ has a rally alert as well. This one's a little bit more interesting because even though as I'm sitting here and doing this pre-market pulse scan, silver's down $1. That's right, silver is down a full buck. So obviously it's going to drag down the AGQ with it, and instead of this one price triggering on the long side, it too is already past its price inflection point to the downside. Now the makeup of this chart, it's still long-term bearish, but it's been under bullish retracement. But it does have still locked in negative momentum that's keeping it from moving higher within this retracement. At this stage, it's safe to say that the retracement is pretty much all but finished. It's done. And now it looks like it wants to resume the overall bear trend. Looking at cocoa, cocoa has a rally alert as well. The downtrend is locked in, and so is the momentum. Looking at cotton, the overall trend, the long-term trend, I should say, is up, but the short-term trend is down. It's in a retracement, and it has locked in negative momentum. So this one more likely will not trigger on the long side. Drip right now has a rally alert. Doug, the inverse oil ETF, has a rally alert. So that's going to be interesting. However, the price trigger and the market are not closely aligned. So this one will probably not play out. Even if we do get a bounce, it probably will not trigger. Dust has a rally alert. That's right, Dust has a rally alert. So you're going to have to watch that one. Chances are the market will gap up on the open and keep running. And that one is locked in an uptrend. GasX has a rally alert. Coffee has a rally alert. Yep, that's coffee. And I know that we do have a member in the trading room that has been watching coffee for some time now. You'll notice on the sheet, the downtrend is still locked in with negative momentum. And the entry price is quite a way from the market. So the market has a lot of running to do before proving itself. LABD and LABU both have rally alerts. The interesting thing, though, is that the inverse biotech ETF, the LABD, looks like it's going to win on this one, and it will be triggered today. It is in a long-term bear market with a short-term bullish retracement, and it also has a 911 on the short side. This is a crossroads signal that the market is at a crossroad, and it's going to break out either way, up or down. Hasn't proven itself yet, hasn't done that yet, but it's definitely watching. All right, the Dow, the S-Dow has a rally alert, and the argument can be made that it most likely probably could trigger today, between today and tomorrow. You'd be wise to watch that one. Also, SQQ, the inverse NASDAQ 100, has a rally alert. It should be noted that both of these securities are locked in on the downside with negative momentum. But they need to be watched, because if we do see a pullback in the stock market, you're going to want to be long these shares. All right, so there you have it. This is what we're looking at today. We're looking at possibility of the market getting ready to correct somewhat. But then again, we won't know that until it is played out in the price action. Let's see. Let's take a look at a few forex items real quick. All right. The dollar is up over $1 today, which is amazing. It's up 132 ticks right now. The dollar broke 103.14 and a half and is currently sitting at 103. Amazing price action. The euro is down 141 pips. We're in a 104 handle. 104.65 to be correct, to be exact. So as you can see, this one though on the euro is interesting because it's showing overall downtrend, but it's locked in on the downside momentum. Excuse me. And it seems to be breaking below all of its supports. So we just hit a new low and a new support has been taken out. So the system is staying short in the euro. Moving down the list here, looking at our euro yen, it's still locked in its bull market, positive momentum. So this one is still in play to the long side. Let's see here. The euro yen is capitalizing off of the pullback from the previous day. And let's see what else we got. Okay, looking at the Australian dollar, it is following the way of gold. The longer-term trend is still bearish, but the short-term trend has been in a bullish retracement. And we do have a 9/11 alert on the downside for the Australian dollar. So the system is locked in on the downside there. And let's see, anything else here stands out. Looking at the yen, locked in the downside, but you got possible positive momentum developing on the long side. So this is looking interesting. And I said, wait, that's the wrong thing here. The trend is on the upside, so the yen is still locked in on the upside. It's going to move with the US dollar like it has been doing. And so it's still locked in. So the system is still locked in on the long side with that one. And that's pretty much it. So a lot of things to take a look at here on the sheet today. And just remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And by the way, I did forget to record our webinar yesterday. So the FOMC webinar, unfortunately, if you were not there, then it's gone. Sorry about that. I just have to get used to the software for that. And remember when I start the webinar to hit the record button. So I apologize for that. But it was a really good webinar, watching the price action and all that good stuff. So anyway, look out for the next one, and I'll see you over in the trading room. Remember, pulsewavetrading.com. That's pulsewavetrading.com.